So I want to start off today's video with a little bit of a discussion about the art and science of trading. Not only is it a great book by Adam Grimes that I recommend you read, especially if you're going to be using technical analysis, but it is a common debate here in the trading industry. There is a group of traders that believe trading is only an art. You must be able to interpret everything you see on a price chart. There's discretion, subjectivity, all that fun stuff. There's another group of traders that believe it's all mathematics, it's all science, it's all moving averages and numbers and indicators. The truth is, it could be either or both. However, it's important that you understand where you lie on that scale if you want to be a consistently profitable trader. Because if you're bouncing around between one or the other, you don't really have a compass guiding you one way or the other, you're going to get stuck in that paralysis analysis type of deal where you're going to be inconsistent with your analysis and really second guess everything you're doing in the market. And this conversation came up today in an interview I had. I did a great interview with Christopher Yule from 10-Minute Stock Trading, and it'll be out at some point. When it is, I'm sure I'll shamelessly promote it all over the internet, but you're definitely going to want to see it. We had a very good conversation about many aspects of trading, and although we are probably completely different in how we view things, his main focus is on stocks, my main focus is on Forex. I'm more price action and price pattern trading, a classical chart pattern type of trader. He's more moving averages. It's cool to see that we agree on the general principles, and that's what you're going to find really across the industry with all successful professional traders. But we were talking a little bit about the technical side of trading and identifying trend, and I said, hey, I'm a price action trader, right? Structure is the centerpiece of my trading philosophy. Everything is based around structure. I identified a trend based on violations and holds of structure. He uses moving averages, and we got to talking about kind of, understanding why we do what we do. And he mentioned that he has tried it this way, right? In fact, his trading mentor trades price patterns, trades structure, trades very similar to how I trade. And, he could be argued just based on competition stats that his mentor is the greatest trader alive right now. However, Chris just can't do it, right? His eyes just don't work that way. And what he found out about himself is that, hey, I am not an artsy type of dude, but the science stuff, I understand it. So how he identifies trends is by using indicators, by using moving averages. And guess what, guys? That's all right. I know if you're a fan of this channel, you're probably, shaking your head, rolling your eyes, Akil, how can you say that's all right? We all know your new structure high, outside return, new structure high principles, stuff like that. Well, the honest truth is that there's many ways to skin a cat. Horrible. Why is that a term? I don't know. But anyway, there's many ways to trade. And what's important is that you understand what you're good at, what you're comfortable at, and you trade that way, and you do so in a consistent fashion, right? The point is this, right? As you're starting your trading journey, as you're watching my channel, as you're listening to podcasts and reading articles and reading books and all the fun stuff, it's important that you try to dial down on what type of trader you think you are. Where do your strengths lie? Are you more mechanical? Because if you are, you're probably going to be more of a systems trader, more moving averages, more indicators, something black or white. There's no discretion, no subjectivity. Either it is or it isn't. If you are someone that's more on the artsy side, that you love the interpretation, you like the freedom of having discretion in the markets where there is a gray area. That gray area fits within a rules-based box, but there is a gray area that allows you a little bit of freedom to kind of operate. You're probably going to go more towards the art side. And of course, you could be everywhere in the middle, where again, I don't use moving averages, but I use indicators, but they're only to complement what I see on the price chart. So you don't have to come up with that answer now, but think about it as you're going through your journey. Think about it as you're going through your training. What makes sense to you? What comes easy to you? And when it comes time to start developing a strategy, that's the time where you really need to dial in and say, this is what type of trader I want to be. This is how I'm going to set things up. And this is how I'm going to progress on the next phase of my journey. And guess what? If you don't like it, you can always go back, right? You're not stuck in it forever, but you do have to commit at some point. All right. By the way, I mentioned rules on new structure high and outside returns, all that stuff. If you guys are new to the channel and you're not sure how I identify trend, I'm going to link you a video below of some free training I have here on the YouTube page. There's thousands of videos, so it'll make it easier to dig through. But I'll link some free training that teaches you how I identify trends, how I read a price chart, how I read a market, just to give you a better idea of what I'm looking at if you are new to the channel. Speaking of which, if you are new to the channel, hit that like button. Make sure you subscribe. That way you don't miss my next upload. There are live streams, there are podcasts, there's this weekend trading edge video, a lot of content on this channel, and I would appreciate it if you subscribed and support what I'm doing here. All right, let's hop into the charts. Got a lot on the radar today, so let's dive in. So before we jump into things, I want to apologize just in case I end up being a little bit short in this video. Smart guy me recorded this entire video, which was about 30 minutes of analysis, only to realize that I was recording the wrong screen. So this is my second go around through it, so it's not going to be as fresh or as energetic as the first time, but hopefully I still give you some quality content. Now, we're going to start here on the euro dollar, and I'm on NinjaTrader right now. You guys that watch the video, I do bounce back and forth between NinjaTrader and TradingView. Those are my two preferred platforms. The all black screen is NinjaTrader. If you get a screen that looks like this, blue gradient in the background, that is going to be TradingView. And on NinjaTrader here, I have my VS1 levels on. These are those red and green boxes that represent previous levels and current levels, I guess, of important levels of structure, support, and resistance. And they give us good clues of where price action is trading at. Have we violated structure? Is there some level we should pay attention to? And you can see that the most recent move here on the euro dollar was a move back down into structure. I'm on the daily chart, so if we zoom out a little bit and look left, we'll see exactly where that structure zone is. And on our last move down, we refused to violate it. We put in a very short extension, which is a sign of a slowing trend. And then we put in a rather deep pullback. You can see our pullback comes basically 100% or very close to the depth of the previous pullback right here. So what I'm looking for here is a potential end and reversal of trend. We've been in this bearish move. It looks like the trend is coming to an end and we may see a reversal. This is also setting up a potential classic reversal pattern as well called the head and shoulders, where price action puts in an extension. We get a pullback, we get a shallow extension to the downside, we get a deep retracement. It usually is either matching or right below, or I guess it could be right above as well, the previous retracement, giving us a neckline. And then what we would expect next is a failed extension down, giving us the right shoulder. And then the validation of the head and shoulders would be a violation of the neckline, which again is either going to be this straight horizontal line at the top of structure, if I can draw this up a little bit, or the slanted line if you're more of a trend line trader. Regardless, this has proven to be a pretty important part in the market, right? If we look at the overlapping VS1 level, so the green box right before it, once again, that's going to represent a previous level of structure. So it's one of those mesh points, one of those ice zones where previous structure support was broken, turned to resistance. And if we can get past that level, I would expect a move higher. Now, if we do move higher, where do I expect we go higher to? Well, probably at minimum about right here, about 107.60s. Maximum up in this level right here around, I would say about 108s is your safer bet, but maximum around 108.50s, 109. Now, if we want to pinpoint that area a little bit more, we can do something like this. We can take in our Fibonacci retracement. We'll take a few of them from our swing high here to our swing low, see if there's any confluence. We have a 50% right at that lower level. We have a 618 at the higher level. Let's take one more from this bigger swing high to swing low. Looks like we have some 3D2 confluence around this level as well. And then last thing, I'm going to bring on my volume profile indicator from the same swing high to swing low, see if there's any anomalies in our volume. And you can see volume slows down within this gap, picks up again really right at this same level. So initial analysis is looking at structure stays true. I think your first level of danger is about 107.80s around that area, with potential profits all the way up to about 109s, 109.15s here in the euro dollar. Next up is going to be the Euro Yen. Once again, I'm going to start on the daily. And this is going to be a good follow-up because the Euro Yen actually put in a head and shoulders pattern, one with a slanted neckline. So once again, we have our directional move up right here. We have our first retracement giving us the left shoulder. We then have the shorter extension, right? You can see this extension right here is shorter than the previous one, giving us the head. The deep pullback going back into this previous level of structure, followed by a failed extension up, giving us the right shoulder, and then a violation of our neckline. And in this case, both necklines would have been violated. If we're taking a horizontal level of structure from the lowest point here, you can see price action breaks and closes below it. If we take more of a trend line connecting the dots between the left neck and the right neck, we have a violation right here as well. So that violation confirms the head and shoulders pattern, and what we would be looking for, there you go, if I can get it right, would be either one of two things. If you're aggressive, obviously you can trade the break. If you're more conservative, you're waiting for the pullback into this right shoulder and then the chance to trade this on the way down. Now, the cool thing about this is that if we go to a lower time frame, a 4-hour chart, we have a few things happening as well. Actually, we'll start back on the daily because the bigger thing is up here, right? On the daily, we have a potential cipher pattern forming, right? If I just connect the dots a little bit, I'm going to bring in my 786 here just to make sure I get it correctly. But if we connect the dots here and we simply do this, right? Boom, 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 and boom, we have a potential bearish cipher, right? The cipher is going to technically complete right here to 786, and it is valid until we violate the X leg. And the cool thing about this scenario, especially if you're someone that uses aggressive entries for your pattern formation. So me personally, I use limit orders. I don't need to wait for any type of confirmation or any other signal. Just once I get a potential pattern, I put my sell order right on the 786. Boom, if it hits it, I'm in. If it goes past it, it goes past it. I'm not saying you have to do it that way. That's just my personal preference. In a situation like this, where we can easily get a probe of this higher level of structure, right? We've seen the market do this before, right? Probe that level, spike, take those stops out and come back down. I would actually be involved in this with that aggressive entry. So that is one of the benefits of being an aggressive enterer on these things. There are also many drawdowns as well, but you know my philosophy, right? There's a give and a take. So there's no perfect way to do anything. It's all about balancing and weighing the balance of the good versus the bad and finding the fit that works best with your personality, your philosophy, and your lifestyle. Now, if we wanted to add one more thing, now we're going to drop down to the 240 chart here. This is going to be the 4-hour time frame. And we have a secondary advanced pattern here as well. If I just bring on the manual version of my pattern recognition software, because I like drawing it out myself and connect the dots, X to A to B, B to C, C to D up here gives us a potential bearish Gartley. I'm going to go ahead and delete this triangle just so you can see it a little clearer. Same situation. Kill zone for the Gartley is going to be from the D leg or the D completion point all the way to the X leg. And we're looking for a bearish move here. Now, the cool thing about both of these pattern formations, right? If you remember the original analysis we did, it was a head and shoulders on the daily, right? A head and shoulders top, which means a bearish potential trade. Well, these are bearish patterns. So if you're someone who's a little bit more advanced at these ratio patterns, at these harmonic pattern formations, you can kind of combine this pattern with your higher time frame idea. So instead of just trading it as a bearish cipher or a bearish Gartley, what you can do is you can maybe take a half a position off as a Gartley or a cipher and then leave the second half of your position on for the bigger head and shoulders play. Now, again, if this isn't your trading plan, don't do it. Maybe take notes and think about how you want to how you may want to evolve in the future. But it's important that you start thinking about these things. That way you can get the most bang for your buck in situations where everything aligns in the same direction. Pretty cool. Originally, I did go to pound yen as well. I'm going to skip it because I'm tired, but pound yen has a very similar setup as well here. Just the cipher completion is a little bit deeper, I believe, but check out pound yen, same time frame, daily and 4-hour as well. Next up is going to be the Kiwi, aka the New Zealand dollar. This time we're starting on the 4-hour chart, and we're gonna once again revisit another situation that has an ice zone. So a period of structure that has become something from something else. So previous support, in this case, becoming resistance. And what I want you to do is pay attention to where the VS1 level is currently printing, and we can draw a horizontal line right there. And again, this gives us a perfect example. You can see that price action has come to a current level of resistance where we've hit a ceiling once, retraced off of it, and hit it twice, really a third time here if you look at this green candle, because we did end the week coming down and coming back up. So 3 times right there. Well, if we look left, you'll see that this same level had importance previously, right? Support right here, support right there. And I'm not sure if we had anything in the past. I don't see any VS1, so I'm going to say no. Maybe if I load more data up, we'll find something. But recently, it was a level of previous structure support. Now, this is an interesting situation because it's a better situation to talk about than a trading situation for me personally, just based off of my rules. But this pattern right here of hitting the highs and basically channeling after an upward directional move is called a high and tight flag. It is a consolidation pattern where we would expect a breakout. Now, there are things that go in this favor and there are things that go against it, right? Something that goes in the favor of a bullish breakout that I really like is the fact that we're consolidating after violating the most recent level of structure. So we did create a new structure high, and now we're consolidating, right? That's a big bullish bias for me. Something that hurts this situation is the fact that although we broke structure, we came right back to another level of structure. So it's hard to make a prediction that we're likely to go higher for me and how I read a price chart until we violate this level right here, which is a little bit higher. Now, with that being said, if we do violate that level, my expectation is that we're going to come to retest our previous highs right here, right? Once again, let's kind of bring some volume in, just curious on if we have anything that stands out at this level. I bet there's going to be a volume spike around this little consolidation zone. There we go, right there. And then really nothing at this higher zone. I thought we'd see a little bit more here, but we actually don't. Regardless, this is still a good level we can look for potential targets. Now, if we want to add one more thing to the equation, either to help us with targets or present another trading opportunity in its own right, it could be the potential of an advanced pattern formation, right? This should be a clear and obvious retracement and start of the extension down, so a swing move. This would be our X to A. This first move up would be, oh, nope, we just miss it. I apologize. Look at that. I thought we were going to have a potential bat pattern here. We need a 50%, or I require a 50% retracement with the B leg. Looks like we only get 45%. That's why the little thing came up and said potential cipher, but not potential bat. Yeah, not going to be advanced pattern formation. So no other confluence there, just the high and tight flag potential breakout. However, the thing that's different about this for me is, again, instead of just seeing a breakout above this level, the level that's important for me is a breakout really above 64.50s. And if we get that, I do think we can travel up to 65.50s. Speaking of breakouts, we have a breakout situation, another one here on the Aussie Canada. This was the pair that had an advanced pattern formation setting up on it, so I wasn't too far off. But this is going to be a different type of consolidation pattern. In the previous chart, we looked at a high and tight flag, which is basically like a sideways channel. This is going to be more of a triangle or wedge pattern where you can see price action is, the range is condensing. So our first move down is bigger, then we have lower highs, then we have higher lows, then we have lower highs. So it's getting smaller and smaller and smaller. And something we like to say here in trading, just kind of as a general principle with price action, is that contraction leads to expansion, meaning that as price contracts, gets smaller, eventually we would expect some type of big breakout from that level. Think about it like squeezing a spring in between your fingers, right? You take your spring, you squeeze it, you squeeze it, you squeeze it, you squeeze it, all of that energy and force is building up. Eventually you get to a point where you can't squeeze it anymore, and that force has to break out somewhere, and then boom, the spring pops out and goes in whichever direction. That's how these consolidation patterns work. And our job as a trader is, one, to identifying and be aware of what may be coming, but two, be able to generate a directional prediction. Now, that directional prediction doesn't always have to be before, right? It could be afterwards, but we do need to have that prediction in order to be on the right side of the markets. So a clue about this one, there are two clues about this pattern that stand out for me. Once again, right, we have a violation of structure. You can see our previous VS1 level right here. Structure resistance was violated to the upside, so we do have a new structure high. In general, that 3-point move gives me a little bit more confidence about continuation in that direction. Two, if we look at the higher lows and the lower highs, and we measure kind of I'm trying to figure out a way to say this without making it too kind of odd or out there. But if you know my style of thinking, thinking of how the market acts, this will make perfect sense. But let's measure the strength of the buyers versus the sellers, right? If we think about every chart as being a battle between buyers trying to push things up, sellers trying to push things down, we want to gauge where the majority of the strength is at, right? So if we draw out these two watermarks, right? This is our first high right here. This is our first low down here. And we look at this higher low here. And we look at this lower high here. Who's put in more of the work? Well, the buyers have put in more of the work to push this lower high much higher than our previous high. The sellers did push down, but this higher low this lower high is essentially the same in the same location as the previous one, right? So if I had to make a guess about what side is winning the battle as of right now, this can always change, it would be the buyers. It seems like there's more buying pressure than selling pressure in the market, which would give me a little bit of a bias to think that, hey, we're likely to break out to the upside. And if we do break out to the upside, where do I expect price action to go to? Well, we got a big red box right here. I would expect price action to go to our next VS1 level around 90.90s, around 91 evens. Now, if we add one more thing to the equation, if we want to help out with targets or present an alternative trading opportunity as well, this is the pair that has a potential bat pattern. X to A, A to B. Oh, measured it wrong. We start that over. Rewind. X to A down here. A to B right there, coming past our 50% retracement. You can see by the X leg, it says this could potentially be a bat or a cipher. After we get a C leg right here, this eliminates the cipher and it can only be a bat. And we know that a bat pattern is going to complete at our 886, which is right at the beginning of that VS1 level. So a nice area to aim for targets, maybe stop in reverse if you're someone that's a little bit fancy, or if you're not trading the breakout and you're just a pattern trader in its own right, this is your entry for a bear bat pattern where you're looking to sell this back down to essentially where we came from. We're going to continue on our pattern theme here on the New Zealand yen. And this is a pattern that you often don't hear me talk about because I don't personally trade it. But it is one of my favorite patterns because I understand it very well from a psychological and philosophical perspective. And it's going to be the butterfly pattern. And our butterfly pattern is going to look like something like this. Well, I should preface it by saying this. There are many ways to trade the butterfly. The butterfly is a potentially confusing pattern, very similar to the shark, where there are a wide range of rules, there are a wide range of ratios, and in order to trade it consistently, you have to dial down on how you specifically want to trade it. So I'm going to focus on a decompletion that comes at a 127 inversion, which means our butterfly or our potential butterfly is going to look something like this. X to A, swing high to swing low, A to B, our very deep retracement right here, B to C coming back down here, and a potential CD completion right at that 127. Now, you'll notice the difference between our butterfly patterns and our M and W shaped patterns like Bulls or Gartley is that the decompletion for a butterfly completes above the X leg. And this often makes it very hard to place stop losses, especially if you have a kind of a structure-based bias, because sometimes they're blind stops. Your stops are in the middle of no man's land. For me personally, I like to have a clear structural reason for where my stops go. However, in this particular situation, you can see that if we look left, structure leaves clues. This butterfly completion is going to be right at an area of consolidation where we do have multiple levels of structure that you could use to place a stop loss. So you could have some reasoning behind it there. Now, what's cool about this situation as well is you can probably guess, right? This level of structure right here was, well, pretty impressive in the past as far as holding, right? We held once, we held twice for a long period of time, we held 3 times before coming down. just like the normal structure swap, just like the normal ice zone, I would expect this previous level of structure support to now act as structure resistance. And that resistance would be a very good sign for the butterfly pattern, because all we're looking for is a little bit of a bounce to the downside. Now, I would bet that if we throw in some volume, that's going to be a heavy level. I didn't do this the first time around, but let's see. Boom, look at that. Heavy volume right in that level, giving us more confluence. And one more thing, if you wanted to take a reach, this will be a valid pattern for some of you, but not all of you, depending on your eyes. And that's the discretion that comes with being a price pattern trader versus kind of just like an indicator trader. The cool thing is you can train your discretion, right? People look at discretion as being a negative, where it's like, well, how can I, allow myself to have a gray area? Well, this is where you train your skills. And if you train your skills well enough and long enough, you're going to be really consistent in what you identify and what you don't identify. It just takes time to do it. But if we look at this as an X to A to B, B to C, C to D, looks like we may have a potential bat right up in this area as well. So it may be an area where you get 2 patterns for the price of 1. Nice. Dollar Swiss is going to be our last pair. Yes, dollar Swiss, you heard me right. Very rarely do I look at Swiss pairs. You guys know how I feel about those pairs. But this trading video isn't just about me and what I want to look at. It is about showing you guys different opportunities on different markets. That's why we bounce over to crypto, we bounce over to gold, copper, platinum, all types of stuff, the DAX, the Dixie, who knows. But what we have here on the dollar Swiss is a massive high momentum bearish move. In fact, the last 1, 2, 3 days were heavily bearish before following that up with a end of the week that was kind of meh, right in the middle. If you guys are new to kind of pattern formations or candlestick pattern formations, the candle at the very end, so the last candle on your chart, is called a doji candle, and it's looked at as an indecision candle. You can see that there is a long wick to the upside, there is an equally long wick to the downside, and the open and close is very thin right in the middle of the candle. And essentially that tells you that the market couldn't make up its mind. At one point it went up, at one point it went down, and at the end of the day it closed and basically at the same area that it opened. And these candles aren't significant in their own right, but they do become more significant when they are at key levels of structure. And it's not going to seem like it here on a daily, but when we go down to a lower time frame, it'll get clear that this is a pretty decent level of structure. This is a nice little pregnant pause. You can see this candle right here spiked up, spiked down before moving up. This can be a good level to look for a potential buying opportunity. One, some of the sellers that sold all the way up here, what are they going to be doing by the time they get down here? Right? They're going to be looking to take profit. They made a big move. They want to take some profit out of it. 2, there's not going to be as many sellers interested in the market. Again, we've tumbled down pretty significantly. There will still be sellers interested, but not as much since price isn't as cheap. So it's a good area to look for a counter trend play here. We go down to the 240 chart. Promised you this level would look a little bit more sexy. Ooh, almost nailed it. How about that? That's pretty impressive, Akil. But anyway, what we're looking at here is price action coming down to this previous level of structure. We do actually hold our level right here. And we started putting in some consolidation, right? Some sideways movement. RSI has also gone oversold. And what we've done recently is we've broken out of this consolidation channel. We've broken out to the upside, which gives me the idea that, or it gives me the ability to say, hey, we have a new structure high out of this consolidation. What I should look for is a retest of structure and a chance to continue up. Now, the only negative about this trade is you have this little stinker kind of minor structure right here, which is going to get in the way a little bit. But if you're someone that ignores this type of stuff, if you're someone that doesn't look for these kind of minor levels, your next major level of structure is going to be right below this VS1 level. You can see your VS1 level is going to print right up here at about 98.70s. I would aim a little bit lower than that, about 98.50s, as a potential target for buys here on the dollar Swiss. I don't know if this lines up with a Fibonacci. I don't think it will, but let's see. Fibonacci retracement, swing high to swing low. 50% is going to be at that main level. Again, I'm a little bit more conservative, so I would look for the lower one here. Not really any Fibonacci love there, unless we do it from this recent swing. nothing really there as well, just more confluence above it, more confluence below it. So maybe even maybe even take a little bit more risk off and aim for here, since this seems to be a pretty significant level as well. I'd like to do one more thing here, just bring on some volume to see if there's any last clues. And this is a good example, a brief, undetailed example of kind of how we dig for target areas. And again, you can see not much volume here, but it does start picking up at the initial level that I identified. So I think as a conservative trader, anywhere starting at this 382 to about right here at 98.50. So what is this, 98.34 to 98.50s is a decent level to trade. I would say this as a last lesson. We talk about not being greedy. One of the lessons that I've learned in my trading career is that I used to be very greedy on big moves. So I would have trades that had like 300 pip targets, and I would miss them because I'd be shooting for 300 pips and disregarding that there was an important level of structure 10 pips before it. And I'd be like, well, I want these 10 more pips are so important that I have to get them. And it's like, really, like, is there really a difference between 290 pips and 200 and 300 pips of profit, Akil? Come on. No. Right? So you can't always be greedy. Sometimes you got to be conservative. And you look at a move like this, if you are, let's say, getting involved in the pullback, and let's say just a random place right in here, right? From here up to the initial level I determined was about 126 pips. From that level, which was right around here, I said, to the 382 is about 108 pips. 108 pips versus 126 pips. If one's going to be safer, you eat those 20 pips and just get out a little bit earlier. Trust me, that's professional advice from previous past experiences that still haunt me to this day. Got it? See ya.